What if everything you thought you knew about Mexico was wrong? While the world's attention has been fixated on China's rise and America's dominance, a quiet revolution has been brewing just south of the US border. A revolution so significant that it's already reshaping global trade, and most people haven't even noticed yet. This is the untold story of Mexico's transformation from an underestimated neighbor to a potential economic superpower. And by the end of this video, you'll understand why some experts believe Mexico could become the most important economy you've never paid attention to. It's a story that's been centuries in the making. A nation once defined by its ancient civilizations, colonial past, and turbulent economic cycles is now quietly rewriting its future. This is Mexico, the 13th largest country in the world and the second largest economy in Latin America. Yet for decades, it's been underestimated by its powerful neighbor to the north, the United States. But that geographical relationship, once a source of imbalance, is now Mexico's greatest strategic asset. But here's what's shocking. Mexico just achieved something that seemed impossible just 5 years ago. The nearly 2,000-mile border between the two nations, once viewed through the lens of immigration and security, is rapidly becoming the backbone of a new economic alliance, one that's reshaping global trade and fueling Mexico's transformation. The numbers are about to blow your mind. The evidence is striking. Mexico's northern states, those closest to the US, are outperforming the rest of the country, with stronger GDP per capita, modernized industries, and booming export hubs. But this economic vitality is no longer limited to the border. It's spreading southward, driven by a seismic shift in global manufacturing known as nearshoring. And this shift is happening faster than anyone predicted. Nearshoring, the relocation of production closer to a company's main market, is rewriting the rules of international trade. As global tensions rise and the US distances itself from China, foreign companies are looking to Mexico as a reliable, affordable, and proximate manufacturing alternative. Here's the moment that changed everything. In 2023, foreign direct investment into Mexico hit a historic high, growing 18% year over year. And in a milestone moment that sent shockwaves through global markets, Mexico overtook China as the top source of US imports. Yes, you heard that right. Mexico, not China, is now America's largest trading partner. But to understand how Mexico pulled off this incredible feat, we need to go back to where it all began. Picture this. It's 1901, and Mexican workers have just struck something that would change their country forever. Mexico's economic roots stretch deep into its natural resources. In the early 20th century, vast oil discoveries, such as the famed Cerro Azul field, catapulted the country into the ranks of major global oil producers. The government soon nationalized the industry, forming Pemex, the state oil giant, which would go on to fund roughly 30 to 40% of public revenue for decades. This era gave rise to Mexico's economic miracle, a golden age from 1950 to 1981, where GDP soared, infrastructure expanded, and literacy surged. For 30 years, Mexico seemed unstoppable. But then came the crash that nearly destroyed everything. But like many booms, it came with a cost. When global oil prices crashed in the early 1980s, Mexico's debt-fueled spending collapsed. The country defaulted on its loans, triggering the infamous lost decade, 10 years of economic stagnation and inflation that wiped out a generation's progress. Yet from this economic catastrophe emerged a strategy that would set the stage for Mexico's current success. It took time, but Mexico rebounded. By the 1990s, it was pivoting away from oil dependency and embracing trade, most notably through the 1994 North American Free Trade Agreement, or NAFTA. What happened next transformed Mexico beyond recognition. NAFTA was a game changer. It eliminated trade barriers between Mexico, the US Tendior, and Canada, unleashing an export boom and transforming the Mexican economy. Exports as a share of GDP more than doubled, while the value of those exports quadrupled. But more importantly, the agreement sparked a wave of foreign direct investment, particularly in the manufacturing sector. American companies began relocating operations across the border, drawn by lower costs and tariff-free access to the U.S. market. But here's what the statistics don't tell you: the real human story behind these numbers. This wasn't just economic theory. It was real impact on real people. New factories, new jobs, and new opportunities. Higher skilled manufacturing roles began to replace traditional agricultural work. Mexicans gained access to pensions, job security, and a more formalized labor market. Education and training followed, slowly improving the skill set of the workforce. Though challenges remain, particularly in rural areas, the foundation of a modern economy was being laid. And today, something even more remarkable is happening. Today, under the updated USMCA trade agreement, rules require that 75% of automobile components be manufactured within North America to qualify for tariff-free trade. As a result, even Chinese firms are investing in Mexican assembly plants just to get that critical "Made in Mexico" stamp. The student has become the master. But before you start booking your investment trip to Mexico City, there's something crucial you need to know. Yet for all the optimism, Mexico still faces deep-rooted challenges that could derail this entire success story. The country suffers from high income inequality, the second highest among OECD countries. Roughly 1 in 3 Mexicans still live in poverty, and many remain in the informal economy, working off-the-books jobs that offer no social protections, healthcare, or access to credit. These numbers will shock you. This informal sector represents 55% of employment and nearly a quarter of the nation's GDP. Its existence limits tax revenue, restricts growth, and undermines productivity, essentially meaning that a quarter of Mexico's economy operates in the shadows. And here's Mexico's biggest weakness that could prevent it from ever becoming truly wealthy. Speaking of productivity, that's Mexico's Achilles heel. While GDP has grown, much of that growth has come from expanding the labor force rather than using existing resources more efficiently. Since the 1980s, Mexico's total factor productivity, the efficiency with which inputs are turned into outputs, has stagnated. For context, Mexico's per capita GDP grew by just 0.7% annually from 1980 to 2019. Compare that to Chile's 3% or South Korea's 5.3% over the same period. And here's the kicker: Mexico is running out of time. And time is running out. Mexico's working-age population boom, a key driver of its growth, is projected to peak around 2030. Fertility rates are declining, and the country will soon face the same demographic headwinds already burdening much of Europe and Asia. So here's the trillion-dollar question. So where does Mexico go from here? The next decade will determine whether Mexico joins the ranks of developed nations or remains trapped in the middle-income bracket forever. The opportunity in front of Mexico right now is unprecedented. The nearshoring boom presents a once-in-a-generation opportunity. With its geographic advantage, youthful population, and trade access to the U.S., Mexico is uniquely positioned to become a manufacturing powerhouse, not just for North America, but for the world. But to make this transformation happen, Mexico must tackle 5 critical challenges. To truly become a developed and rich nation, it must address its structural weaknesses. Expand access to quality education, especially in rural areas where 40% of the population still lacks adequate schooling. Integrate informal workers into the formal economy through targeted incentives and simplified regulations. Improve access to credit and capital for small and medium businesses that employ 70% of the workforce. Invest heavily in infrastructure to support the manufacturing boom. And most critically, boost productivity through innovation, technology adoption, and comprehensive workforce training. But there's one massive risk that could destroy everything. Ironically, one of Mexico's biggest risks is its greatest strength: the U.S. The American market absorbs 80% of Mexico's exports, meaning any change in U.S. policy, elections, or demand could shake the Mexican economy to its core. However, this dependency might actually be Mexico's secret weapon. But unlike Germany's reliance on global exports, Mexico's future is increasingly regional. In a world moving away from globalization toward regionalization, that may be the safest bet of all. While other countries scramble to diversify supply chains across continents, Mexico sits right next door to the world's largest consumer market. So here's the bottom line. Mexico stands at the edge of transformation. Its past is riddled with crises and missed opportunities. But today, it has all the tools needed to build a new chapter in its economic story. The next 10 years will be absolutely crucial. The road ahead won't be easy. Entrenched interests resist change, corruption still plagues institutions, and global economic headwinds threaten progress. But if Mexico can harness this moment, the age of nearshoring, innovation, and strategic reinvestment, it may not just grow. Mexico may finally rise to claim its place as the economic powerhouse it was always meant to be. And when it does, the global economic map will never look the same again. What do you think? Is Mexico destined for superpower status, or will it fall short once again? Let us know in the comments below, and don't forget to subscribe for more deep dives into the world's most surprising economic stories.